Hey guys, welcome back to the channel. So, a lot of people have been asking me whether I still hold my Tesla stock and whether I'm actually considering dumping Tesla. I've also had a few questions about whether people should be buying Xpeng and Neo in place of Tesla or in conjunction with Tesla as part of their portfolio. Now, admittedly, over the last maybe 2 to 3 weeks, I've been a little bit lax on keeping up to date with stock market movements, stock movements generally. I've had a lot going on in the background. But this question has kind of piqued my interest, particularly because Carly in the members group, shout out to Carly, actually posted something earlier today about Tesla. And I think it's really, really interesting. So I'm going to have a look at it and answer the question directly around okay, so if you're holding a portfolio right now, you've got Tesla in it, do you go and buy Neo and Xpeng as part of your strategy, or do you replace Tesla with Neo and Xpeng? Now, obviously, this is not going to be financial advice. This is for educational purposes only, so please do use it as such. But I'm going to give you my thoughts, what I think, and maybe a couple of things for you to consider to employ in your investment strategy. But let's start off and have a look at what's going on with Tesla right now, because the share price movements of Tesla this year have been right. They've been really, really interesting. I mean, I remember back on January 26th, the share price was $891 a share. And I remember looking at my portfolio that day because I have Tesla in my portfolio, thinking now might be a good time to take profits. I didn't in the end, and I kick myself for it now because on the 8th of March, the share price had gone from $891 to $563. That's a massive, massive dip. That's a 330-point dip in the share price. And ever since then, we've seen the share price kind of bumble around that limit, go up over $600 to today, well, yesterday, the share price closing at $605. So we've been on a bit of a roller coaster in terms of the share price for Tesla. It's trading sideways right now, and that's not necessarily unknown territory for Tesla. Traditionally, it has always traded sideways for a period of time, and then it goes through a massive fat of growth where it picks up quite a bit and it delivers stellar performance over a very short period of time. Now, circumstances have changed because Tesla's market cap is now over $700 billion. So there is an argument to say that now, because it is included in things like the S&P 500, that it is going to be harder for the share price to move. But I do want to address in this video, what are some of the key considerations if you are holding Tesla in your portfolio right now, and question why you're holding Tesla, why you're buying Tesla, or why you're thinking of selling or buying Tesla in conjunction with Neo, Xpeng, or Li, or any of the other EV manufacturers that you can basically go and get on the stock market right now. I think it's important that we go back to basics. Now, when we look at some of the problems that Tesla have faced recently, I mean, it hasn't been a great period for them. Bad press. There's been a whole host of stuff going on. So we've got the Geiger factory in Berlin, which is wrapped up in some bureaucracy. We've had the semiconductor shortage, which, to be fair, doesn't just affect them, it affects other people as well. It's a global shortage. They've had issues with recalls, and this is something that I have leveled at Tesla before: quality control. They need to do better at making sure that the vehicles coming off the production line actually are at the standard that they need to be before they get delivered to their customers. Now we have a massive recall due to possible bolts failing, and that's going to be happening over the coming months. We've also had issues with the fatal car crash in the United States. Again, another one of those. It's a loss of life nonetheless, and so an investigation has to take place, and that hasn't been positive. We've had the anonymous threaten Elon for what Elon does, his tweets. I mean, Elon will be Elon at the end of the day. And whilst he feels he's having fun, you have to question sometimes what he is doing as a CEO of an enormous company like Tesla. And then obviously you've got the Tesla shorts, Michael Blurry and the like putting shorts on Tesla. Now, to be honest, shorts aren't necessarily anything new. We've always had people who have shorted Tesla. I think because Michael Blurry has been out talking about why he's shorting Tesla and his views on Tesla, I think it may have gained and garnered a little bit more attention, purely because he was the guy who predicted and forecast the financial crash back in 2007, 2008. He was on the radar of that way before anybody else. So with him saying that he's short in that stock right now, it adds a little bit more attention to the conversation around Tesla. Now, I think before we get into, Xpeng, Neo, and whether they are better bets than Tesla right now, I think it is important to just acknowledge one thing. Traditionally, Tesla has been the barometer for performance in the EV sector. So typically, if you see a run on Tesla, then naturally Neo, Xpeng, and other players tend to get a run. That hasn't been the case over the last few weeks, at least. What we have seen is that whilst the Tesla share price has traded sideways, Neo and Xpeng have actually seen quite a nice drive in their share price. And that isn't the way things typically work. And so I can understand why people are asking the question, should they now be invested in Neo and Xpeng over and above Tesla? Why people are thinking about closing their Tesla positions and investing money into Neo and Xpeng. And I think at this point it's really important just to take a step back, okay? Just to take a step back and take stock of what it is that you're buying, why you want to buy it, and what you're doing this for. Remember, investing is a long-term game unless you are day trading or you have a short-term strategy. This is very much long-term. Now, the reality is that Xpeng and Neo, yes, they are challengers to Tesla in the Chinese market. However, Tesla still has the lion's share of the market in China. And that is unlikely to change anytime soon. Yes, sure, they're going to give a Tesla run for their money. Absolutely, they will. But is it likely that they're going to overtake Tesla in terms of market share in the short to medium term and certainly in the long term? I personally do not think so. And I think for Tesla, the competition is actually helpful. It is useful because it's all about accelerating the journey into electric vehicles and sustainable, as Elon sees it, transportation. Now, there are a couple of things that I think are really, really important to acknowledge with this as well. And that is not just looking at it from a Chinese market share point of view, but actually having a look at it from a global point of view as well. If you just have a look at Europe, yes, Tesla has lost a little bit of ground now. I think their market share is around about 13 or maybe 18%. This article right here kind of highlights that. But there is a strong indication that Tesla is going to rebound back and start to regain some of that lost territory, particularly with Volkswagen doing really, really well with their electric vehicle, the ID.3. Now, I've seen a few of those around. They look really, really good. I don't know what the practicality problems are with them in terms of charging infrastructure, range, and so on and so forth. But Volkswagen have certainly been a challenging force for Tesla here in Europe. But analysts are saying that actually through this year, Tesla are likely to claw back their market share up to about 20% in Europe. And I think that's a really important factor to bear in mind. Now, I watch a lot of YouTube and I watch obviously a lot of Tesla content. And whilst we're talking about, Volkswagen and competition, I think it will be amiss of me to not acknowledge the fact that we now have some really, really good cars coming out on the market. I mean, the Mercedes EQS looks absolutely phenomenal. The Audi e-tron looks absolutely phenomenal. Then obviously, of course, you've got the Porsche Taycan. Now, on CarWow, they did a little bit of a drag race between those three cars. And one thing that really astonished me, and I'm going to throw this up on the screen right here, is the difference in the price of these vehicles. And I'm going to mention this because this is where I feel as though Tesla now has a strategic advantage over and above the competition out there. Yes, there is competition. Yes, there may be better built cars on the market right now, but the price difference between these vehicles is going to be a factor unless you're the kind of person who has so much money that you just don't care about the car price. But in this screenshot right here, you can see that the price difference is significant, £30,000 and more sometimes. And even with the different variants of these cars, with Tesla, you often get bigger range, more capacity, particularly when you start comparing things like the Porsche Taycan. You get more range in a Tesla for less money. And I think that is a really big determining factor in terms of Tesla keeping market share. in the UK at least, and certainly in other markets. The other thing that I will also say is a realization that most people who are going into EVs now have around charging infrastructure. Now, in the UK, it is pretty poor. If you're buying a Taycan or you're buying an electric vehicle, if you travel quite a bit of miles, and most people who buy these cars for business do, the first thing you're going to realize if you go for a car that isn't Tesla is the charging infrastructure. It's not really up to par at this point in time. Of course, this is going to change, but this is why I believe that a strategic advantage that Tesla has, another strategic advantage, is the supercharging network. Just being an owner and a driver of a Tesla myself, I'm starting to see that the sales numbers have ramped up and we're seeing more threes on the road right now. And we haven't even got the deliveries of the Model Y just now. So I think from a competition point of view, yes, there is competition out there, but Tesla being first movers are way ahead in terms of, just charging infrastructure, practical things, let alone talking about tech, full self-driving, and all this other really important stuff that adds value to that stock overall. The other thing that I think is really, really important, I think we need to mention when we're looking at Neo and Xpeng and other EV manufacturers in this conversation is the fact that with the Tesla share price as it currently stands, I at least don't believe that the share price is going to move as much as it has historically. And the reason for that is because of the market cap. Now, it's very easy to move the share price of a company when they have relatively low capitalization numbers, 100 million, 200 million or so. Tesla is at this point right now where they are over $700 billion in market capitalization. In order for the share price to move, they're going to have to get a lot of things right. And this is where I have to be honest and talk about the real practicalities of where we are right now and the reality of where we are right now. I don't envisage the share price of Tesla jumping up 20, 30% in a very, very short period of time. They have to get a lot right, particularly with all of the new competition coming through. They have to ramp up deliveries and sales. They have to ramp up supercharging, facilities. They really need to also ramp up battery technology. With the Gigafactory in Berlin being, held up at this point in time, that puts back the new batteries and the production of the new batteries quite a bit. So there's a lot riding on Tesla getting a lot of things right now. And there are lots of moving parts to this. And unfortunately, as investors, these are things that we just have no control over. So for the best part of what we're doing in terms of strategy moving forward, you really have to understand why you bought Tesla in the first place and ask yourself the question, do you feel that it's a good bet long term? If the answer to that question is a no, then you have to reevaluate your strategy. You have to reevaluate your position. Is it now worthwhile selling your Tesla? Hopefully you're in profit. If the answer is yes, actually long term, you really still believe in the company. I mean, the targets for Tesla are still at 3,000 last time I checked from Kathy Woods for the stock price in 2025. Now, that's really, really close. At this point in time, that feels unrealistic. For the share price to go to $3,000, the delivery numbers and the sales and the profits would have to be astronomical. But if you believe that long term, past 2025, Tesla is still a very good bet, then it's worthwhile holding. And maybe you should hold. The question then becomes, should you then go and buy companies like Neo and Xpeng, who have seen a little bit of a run on their share price right now? Well, the answer to that is, well, potentially yes. What is the benefit you're going to get from buying Neo or Xpeng? Well, you're going to be able to hedge your position. If Tesla don't do as well in China and Neo and Xpeng do, well, the share price may be affected a little bit because of loss of market share in China. If it's picked up by either Neo or Xpeng, hopefully their share price increase and you're partaking in those companies there. So if you are thinking about Neo, Xpeng, Tesla, buying Neo and Xpeng or Neo or Xpeng to hold alongside your Tesla as a hedge would be a very, very prudent approach. But again, with all these things, you have to ask yourself why you're doing this in the first place. You have to have a strategy. Please don't fall into the hype of short-termism where you're simply looking at share prices based on they've gone up really, really high over the last 3 to 4 weeks, and therefore I want to get in. That's not the mentality of a long-term investor. We think long-term, we're thinking years ahead of time. And we do know that electric vehicles are going to be a thing. The world is moving towards that. The question is, are Tesla, NIO, Xpeng going to be big players? I personally believe that Tesla is going to be the main player in the space. There are arguments to say that Volkswagen will also be a major player. So again, if you're looking to hedge your bets, is it worthwhile buying some shares in Volkswagen as well, just to give you exposure to all of the options? In the Chinese market, I think big players out there will either be Li, Xpeng, or NIO. So again, do you want exposure to those companies to hedge your bets? I hope you find that useful. May have been a little bit of a ramble, a little bit of a rant, but let me know in the comments below what your position is. Are you still holding Tesla? Have you lost faith? Are you confident still? Or are you more bullish on things like NIO, Xpeng, Li, Volkswagen? Let me know in the comments. If you've not listened to the podcast this week, there it is right there. As always, guys, remember, money is a tool, life is for living. Have an amazing weekend.